Okay.
All right. So let's see. So just quickly for you, I was looking actually at Nike contracts March 18th, 160 calls. And the reason why I was looking at them, do you guys remember what Nike did on recent earnings? Anyone? No?
Didn't they
Okay,
rip?
well, so they really, really ripped, right? So they had a huge gap up here on earnings. So here's the gap up. It went all the way from here, and then they just continued running. So you're talking about from 130s to 170s, right? And then if you look at the price action here, they came back pretty much to retest, but they didn't really fully retest the whole gap, right? But they had a good bounce here, and then they created a new support at 146. So I was just like, okay, well, let me see, how these contracts, because people forgot about Nike. Look at this. The contracts that I'm looking at right now, at one point were at $2,300. Right now, they're 61 cents. For stuff like this, for me at least personally, I don't mind putting in, for me, $500,000 into this, and then if this decides to go, just let it run into the earnings, and then let it appreciate. And I'm pretty sure that it could gain this momentum. Remember, Nike had some NFT news, not that I care about, but people do, and it might get some bounce during the ER call. And if it does, I'm risking $60 per contract potentially if it does have a crazy gap up, or just a run into the earnings that I could sell these about $600-700 each. So I was just charting this a little bit. That's what I was looking at. I usually look at an ASHI candle just for the clarity. So if you go on 30 minutes or something like that, you're able to see the big picture. And then, if you're charting here, let's say like this, you're able to see the break. So you're able to get these at 77 cents, and they went all the way up to $1.01, which is not a bad gain. What, 30 something percent? And today, same thing on AMD. You guys had. I was charting this one. You guys look how easy this one was on AMD. So if you look at AMD at about 10 o'clock, we had the double bottom neckline created. Then you see the double bottom happen here and here. You guys see that? This is for today.
Yep.
We had the double bottom, then you have the neckline, which is your entry on double bottoms. And then you have something called a little demand zone being created right off of this wick to the neckline. And there it goes. It went up here and came back right for a retest. So if you got in on these contracts, let's say on the break of this, let's say you got 130, Phil. I'm just going to say, sure, let's say you got 135. And you put your stop loss to be, man, I said 105 for me, but maybe, let's say you're like, no, man, fuck that. I can't do 105. I'll do 120. You're still good. The best part is, look at this. It keeps going, and there's people, right? I'm one of them that will find a way to sell right here, and then I will rebuy here, and then sell right here, rebuy here, and then sell and play the game. Does that make sense? I mean, that's how you can look at contracts, and I strongly suggest that you chart a contract. If you guys look at my charts, you'll notice that I have an active trader on usually here, and then I have a chart right here next to it that shows me, what's the price of the chart? Am I getting a deal, or am I buying it at the peak or at the high of the rejection, like right here on AMD? So it kind of helps that you're charting the charts that you're about to get in. And Earth is really good at that. He's in our group, so I strongly suggest that you guys start charting that. Okay, does that help?
Yes.
One second, let me just turn on this heat in my house. I'm about to start melting.
I'm like sweating here. It was like
Same
80,
here, man.
80 degrees.
76 in my house.
Outside, it was 80 something.
Oh, yeah, I can't do that either. Okay. All right, I'm gonna give you guys a chance to be right about something. Right here, let's do on this chart. We're gonna set it up. We're gonna delete all this stuff. Delete all of this stuff. What do you guys see?
Like where? I see a lot of things.
On this chart, what do you see that's relevant?
Inverse head and shoulders.
This right here?
Yeah.
Okay.
Is that a big bear flag at the end of the chart there?
This right here?
Yes, sir.
No, that's not a bear flag. Bear flags occur on the bottom. So a bear flag would be, let me see. So you had a bear flag right here. So from here to here, and then this would be your bear flag right here.
Oh, I'm so sorry. I'm in a bull flag.
Bull flag, yes. Okay. I just want to make sure that you guys understand that that's the correct way. It is an inverse head and shoulders, and it's the reason why it's an inverse head and shoulders. If this shoulder was any higher than this shoulder, that's a failed. That's not an inverse head and shoulders. So here you're still making higher highs, right? Here you're making lower highs, lower highs. You had, some people call this, this is not an inverse head and shoulders here, right? If you're to call this inverse head and shoulders, I might have just as well delete you from the Discord. Why is this not an inverse head and shoulders?
It's at the top of an uptrend.
Yes, correct. You don't get inverse head and shoulders at the top. I see a lot of people calling a lot of inverse head and shoulders everywhere, and it's just aggravating me. I just keep deleting people, blocking people on Twitter because you can't teach them that does not occur at the top. Inverse head and shoulders occur at the bottom, and you have lower highs, you have lower lows, and now you're going to consolidate a little bit, and then you're going to break out. This is not the first time that we've had similar pattern on Apple. If you guys look at the 110 area closely enough, you'll see that you had a couple of inverse head and shoulders. There was one that I was watching way back. It was something, I believe it was like this. You guys see it here? So it was this, that, and then it broke and it popped, and then it came back to retest the break of that, and then it continued higher. So just be careful when you're watching patterns. There's patterns that are continuing patterns, and then there's patterns that are reversals. Obviously, you want to pay attention to where we are in terms of the price action, so that way you're not calling, for me, when people call an ascending triangle on the bottom, I get goosebumps, right? I mean, they're like, yeah, man, this was an ascending triangle right here. Like, hey, this was a great ascending triangle breakout. Yeah, there's no ascending triangles on the bottoms, right? Ascending triangles occur on the top. You have to know where patterns occur so you can actually call them what they are. Because you might get a wrong impression, you're going to be on the wrong side of the trade just by doing that. Okay, now that we're beyond this, okay, Apple looks good tomorrow over 177. I don't know how the markets are doing. I haven't even checked just yet, so we're slightly down on the markets, but let's cover a couple of big boys. And honestly, tomorrow, guys, I wanted to do a watch list, kind of help you guys with the charting a little bit more so than anything. But tomorrow is going to be a big day, right? I mean, it could be the day that decides the fate of the market. If they announce the CPI is, unfavorable by a couple of points, and some of the stuff that I've been reading from JP Morgan is that we are not even at the peak yet for CPI. So if you're not in the peak, you're going to have to get a lot more aggressive on the basis points, what you're going to be increasing in order to level down, the inflation, right? Or another way, quick way, is to have a war. And we won't get into that, but that's also a possibility here. So definitely watching Apple over 177. If you guys like the small caps here, we'll just look at this stock here. I had a good feeling that this was going to run to about 16 bucks, and it did. So here you have this one. Really no setup on it, but I would definitely watch it over 15.3 if it decides to keep going. Make sure you have an alert on this at like 15 levels, so that way you have a heads up when it does come around, that you're able to kind of treat it. Okay. So let's see what else we got. I think I had Apple. I think I had Microsoft. See what else I have on my list here. Yeah, Microsoft. Did anyone? I think a few of you traded it today with me live. I don't know who, but okay. So Microsoft had this gap up here, so just be aware of that. Gap ups like to be tested, so this would be the gap up. It would be a good area to get in on a bounce. So if I was to play this, I don't know how you're going to open. I would look for a bounce somewhere here between this area. This would be my stop loss if I get on the top, or if it breaks this, I would get out. Would you guys call this a bear flag or bear pennant?
Yeah.
Okay, tell me why. Can't you just say, yeah, I want to know why. Why do you think it's a bear pennant?
Because it's shaped like a pennant, and it keeps testing off the resistance right there. I don't know. It looks like it's in double top or something. I'd ape into some puts right there.
Okay, is it inverse head and shoulders too?
Yeah, I see that too.
Okay, but is it a bear pennant?
You're just talking about like
Ooh, yeah,
since the
yep,
24th?
yep.
Oh. That's real juicy right there.
Okay, so if it's a bear pennant, what does it have to do?
Test the top of the triangle.
Okay, what else?
Oh, it's got to test the 50. Or the
I know.
38. It's got maybe higher.
Okay, now we're getting into multiple choice. Anyone?
It can't break above the 38.2.
That's correct. So it cannot break above this 38.2 in order for it to be considered a bear pennant. So keep that in mind. This is your quick check to know if you're right, if you're wrong. So we're still okay. It's still actually a bear pennant. Whether people think it's an inverse head and shoulders is also a bear pennant, which adds what? So if every pattern that we know as traders, and I'm going a little bit off topic, but I just want to make sure you guys are understanding some stuff. If every pattern worked in trading, we would all be billionaires today, right? So for instance, here, you're pushing up, you had a higher high, you're making higher highs. Here's your ascending triangle here. You guys see this ascending triangle pops, comes back for a retest. Then you have another lower high being made here, right? So if you want to call it whatever here, channel. You have a nice channel, dips below, gets back in, you take it. Then you just keep going, right? And then you can see that you have a couple of entries here. Not every time do the patterns work. All the traders that we know, right, on the retail side, we use, whether it's price action, whether it's indicators, we use all sorts of things, right? But most big institutional traders, they do not use patterns. They use quantitative development. They use quantitative analysis to figure out what they're going to do. All they do is hedge their position. So you just have to keep that in mind. When you see patterns, it's based on a Japanese study that the patterns work, and based on the guy that traded rice back in the day off of it. Don't be married to a pattern, right? Sure, I mean, this looks good. We have, I would say if I was going to trade tomorrow on, let's say we run, I would look at this candle, the high is 315.12. So sure, just make sure that, that we are over the 315.512. And the reason, why do you guys think this works, right? I mean, we see this level. They know we see this level, right? The market makers see it, but why do you think it works? Why would this work tomorrow if we were to go over? Who
Because,
comes into trade tomorrow if this breaks?
The institutions, that's their sell or their
All the
buy.
retail comes in. The retail will come in and buy the hell out of it once they see it, because all they see is that is a line here. Institutions bought right here. Institutions bought when everybody was afraid. They loaded up the boat right here, and they're gonna most likely, if the CPI is bad, do what right here?
Drop it.
Well, what they're gonna do is
Burn
if the bad,
premiums.
they're gonna go up. They're gonna set you up. They're gonna cross your level. They're like, oh my God, you're over the resistance right here at 323. We're going 330. Let me load up on the 330s. And then Michael loads up on the 330s right here. Little did he know, we get something that looks like this. Right? So that's why you have to take profits. All this, I was trying to tell you that people that want 100%, sure, we caught at Microsoft today for 100%. Drew, how long were we in a trade for Microsoft?
Like, it wasn't long, a couple minutes at the most.
Yeah, we were a couple of minutes. I was ready. I mean, if I didn't see it continuing running, I was ready to take my profits to 20%, and that's okay with me. I take my 20% anytime I can. Okay? For people that don't take their 20 profits, the pigs get slaughtered, right? And that's pretty much what will happen to some people when the patterns fail, because people see it, right? Market makers see both sides of the supply and the demand. They see the orders. Right, you guys are aware that Robinhood sells the data. Citadel uses it. I mean, if you see both sides of trades and you can see the imbalances, plenty of ways you can play it, right? If I told you what's happening and the orders are coming through, not very hard to calculate some things to let you know how to screw them up. So think, they want to screw you up. You just got to know how to defend yourself. So 315, we're going to watch that level as always. You want to be aware of some stuff that some other retailers don't use. So there's an important level right here. You guys see how important the level is right here that I circled, like literally on the money of the top of this 318.62. And then what do you guys notice about the 315 level?
You have so many VPOCs there. I mean POCs, sorry.
Yep. So you have 1, 2, 3, 4. So you have 4 days of somebody pretending that they're going long and buying, right? And then they dipped it, they trapped more people here, and then they're like, oh, we're gonna go higher. It was pretty much like a reverse psychology, right? They're like, yeah, we dipped it, called the market makers pattern, then they reversed it back, and look at the selling that came in. I mean, heavy selling. So to me, this is a really, really important level tomorrow. Almost this zone right here is very, very important. If you get in on the break of 315, you have to be quick. If you get in 5 contracts, make sure you take your profits fairly quickly on 4, and you keep 1, and maybe that 1 makes you a lot. But you have to learn how to take profits. Do not let your trades go negative against you because you're greedy and you want 100% or you want to become a millionaire overnight. That's not how it works. Okay. SPY, so obviously here we have a little bit of like a cup and handle forming in terms of patterns. You guys see it on 1 hour.
yeah.
So you have a little bit of a cup and handle, like a rounding thing here. So let me just delete stuff. So 458, I guess this would be the 4 is it 4? Let me see what this candle is. Do you guys know that your prices of the candles are in the top left when you highlight it? See it right here, 458.12. Yep. So just making sure people know. So here you have a little bit of a cup maybe that's forming. And what I like to do is just basically kind of draw a parallel to this and see if we come to the bottom here with a hammer candle. I like to buy it on the bottom versus the people that like to buy it on the breakout because I get a better fill and a reward for taking more risk. So that's where I like to get in. So we'll watch this tomorrow. I'm not married to it. We'll look at the 30 minutes and see if they're lying about some stuff here. Oh, of course they are. Same thing as Microsoft that we just saw. So we have this huge, basically this becomes your demand, guys. This whole thing here is your supply zone. You know, and it's almost like a huge cup and handle. You guys see this?
Yeah, that thing's huge.
Like this is a giant cup and handle. So honestly, a lot of people are looking at 458.11 for the calls. I'll be more interested in this on this POC right here that they're hiding away from everyone, which should be 459.55 for me. So tomorrow you have two options. You can go long at 458.11 or go at 458.9. Just remember, we do have some epochs. Usually when we run like the way we are running now, some gap ups or whatnot, you're going to have these 28 epoch 28 right here, and it has a nice low volume distribution, which helps us draw a demand zone. Okay, so that's my VPOC there. Let me see what else we got. So there's a little bit of a POC right there, which is pretty good one. You guys see how well this one is? It's a constructive POC, right? It comes here, comes here, comes here, here. So this is a fairly important POC here. So what most traders do, you know, the big boy traders is once the price starts falling back down, they will place an order right here and wait. And that's what you're supposed to do as well. Okay, there's another POC at 436. This is crazy. That's too far. With a nice volume distribution too. You guys see the little bell curve, like a nice standard in between. Pretty nice. VPOC, what is that? 128. Somebody taught me that this date here shows up. I never paid attention to it. And then you got a couple of them here. I will mark this one. And then you have this one here. And you just mark them as POCs here. Okay, so these would be the levels that I watch tomorrow for SPY. So if we do higher, if we go higher, right, just be aware of the POCs above, right? You want to know that you have a POC here, you have a POC here, and then you have some major POCs on the top side here. Pretty sure we're not going to make it there unless they announce some crazy news, but okay. And then, so I'm just guiding you through the steps, right? I saw all of this. What I'm interested now to see where are they on the clouds, and I'm looking for confluence points, right? So I'm looking here. I see the daily top matches this level right here, 462.6. So if I was to go to 462.6, that's a POC from, I guess, 114 or 113. And it's just a regular POC. And that one has a little bit. Let's see. Did I not just change the date on this? That's one I did. Okay, so then you just draw your supply and demand off of the volume there. Try and grab that guy. So there's your POC there. And you have your targets, right? So this becomes the planning side of your trades. If you were to break, you know, below, you guys see that you have only one POC here, pretty much in between this whole ordeal here at 441. So if it breaks 447, we have about $6 drop, pretty much 440, 441 level that we would print on. So they'll watch this, right?
Now, Sorry, Shorty. So would that big drop happen quick, or would it happen more so like over a big span of time?
This would be very quick. If we were to lose this right here, you see the volume on the most recent, it's B-shaped, meaning on the lower side, there's not much support. And here you see also that there's not much support. You have a little bit of support here. You have a couple of value areas lined up, about 443, but I don't think it will be in the way of this one right here.
Okay.
If you're to go into 1 hour, you'd be able to kind of see if there's anything in between. So the last time it was at 448. So nothing really in between 447 besides this serial consolidation that happened, but it happened below the value area a couple of days ago. So it'll be a quick drop. So then I just look at the levels, right? So I know that this POC matches to the 463 level. I'm also realizing that it rejected that, a weekly pivot, weekly mid right here, right? So that's weekly mid is one of the most powerful things where things can reject or bounce from. If you don't believe me, I'll just point out a few for you guys. 1, 2, 3, 4, congestion, and here you go. Weekly mid's not something to mess with, especially on indexes, right? Like this one or indices, we see here a couple of times rejected. So usually when something like this happens, it'll retrace probably the half of the move. So you can expect that 447 to happen. If it breaks 447, I'm expecting. If it breaks 447, it will go to 434. So let's see, we're on top. So tomorrow, easy short, like super easy short. If we're to go below 454 from the clouds perspective, which is here, you guys see it?
Yes,
454.
Sir.
If this was to happen here, it would literally, so just think about it. 454 is here, and that means it's like right around here on the daily cloud, right? Between this level, let's say 454, I'm just pointing somewhere around here. I guess it was all activated here. So this is the 455 level that I marked. You see, once it breaks this level, that there's no clouds in between. No lines, no clouds in between. So the next level,
451.
the next level, we have the VPOC at 450, we have the daily pivot, we have the daily middle, and the weekly pivot here. If we are to break this tomorrow, this is your account tripler. This is where you can go heavier on your short side. And I don't know why the fuck I changed fast as fuck, boy. I don't know why. I think somebody was messing around. I changed it. But
You
this
killed,
will be a...
You killed the catching rockets.
Yeah, I did. This will be quickly here tomorrow. As soon as we are breaking this, because the clouds are telling you that there's no confluence points between this and that. So look, I marked the X here below the 454, and then it all the way to the daily mid, which also is, corresponding to the 4-hour mid, and it's also your VPOC. Do you guys understand now why I give you a few more tools to look for confluence points and ranges? This is the easiest range tomorrow to short, right here. And if you're to go on your, if you're to go on just your daily candles, here's your 454.91, and you see it's very close to the bottom of this candle here. For us, it gives us a little bit more confirmation that it's not going to bounce off at the bottom of this. We're waiting for it to kind of crack down, maybe 10, 15 cents, and then we get in. And this is just based off the clouds, right? I'm not even coming up with something. And then you have the gap start, which is there all the way to here. And we would anticipate a bounce right here at 450.15, which is close to a psychological level of 450. And that's our VPOC right there. So that's how I look at stuff when I combine VPOCs, clouds, and then, if I'm intraday trading tomorrow, for you guys, if I'm looking at orbs, right? So for me, it's good to know where these levels are once we open tomorrow. If I know we opened about 458.11, okay, well, we gapped up. There's a high chance we're probably going to come back for the retest. And let's say that's set as an orb low. in a day, I would definitely buy calls there as a high risk, high reward type of play. And then let's say that this is your 127 and it breaks. Well, it's not a bad idea to buy here. It has a couple of more bucks to run based on the levels that we know. So that way you can gauge the spacing between your levels, right? You can figure out how much room and meat you got. This fast as fuck boy has to go.
Hey, Shorty, so for Confluence, would you use like the dark pool level, say, just to make sure that all your points align too?
Oh yeah, of course. I mean, dark pools, you know, I think Flipper covered with you guys, covers probably about 40–60% of the volume in the day, right, of the stock. Even though when the volume is calculated, so if you guys look at my screen here, I have something that tells me the volume here. So SPY today had 92 million in volume, but that's actually below the average. The box is red, it means it's below the average, and it's telling me, you know, just what kind of volume they had, right? So if I go on the daily, here, it's telling me, you know, majority was the buy volume on SPY, about 81 million SPY, 10 million, 11 million sell, but we're still below the daily volume average. So if you look in here, right, it's not a great volume increase so far. If you're just looking at these black volume bars, it's still not like it's not great. So okay, so let me go here. So SPY, ES, and Qs. Hopefully, it's kind of making sense, the concept that we do, right? And as a group, and then, you know, we also use dark levels. Some of you guys use trade dedics or whatever it's called. So here's another repoc here. And if you're not comfortable trading like these days, just wait till Friday. Friday seems to be the easiest day for us actually to make money. With the OEI script and everything, honestly, it makes it so much easier to see what they're doing that day, because they have to act on it. It's the last day they have opportunity to do something on it. So this is the NQ levels. I'll watch this. If we break the high of the peak here, if you guys see this level, if you guys see how well this rejected here, probably need to move it down a little
almost to the penny.
Well, it goes on the bottom of this usually. You want to put the price on the bottom of the yellow line. So it pretty much rejected right there on the penny to it. So tomorrow, if they're going to do something shady, you're going to be watching this level right here, you know, for the bounce of the previous day POC, come back here at the like 14,943. If they drop to there, just buy some Q calls and then watch and see if you can get it, and put a stop loss like maybe, you know, here on the NQ. So find the same thing for Qs. It'll be the same patterns everywhere. And you know how many people fight to draw demand? Demand and supply zones, guys. If you look, everybody has 10 different million ways to draw supply and demand. So here's your supply, here's your supply zone, here's our demand zone that works like a penny right here to a penny, and then you look right here. This is a level, this is a level. So there you go. So tomorrow, if we're to able to kind of break this POC right here, right? So it should be 367.27 for me. Well, maybe a little. Maybe that way. Let me make sure these levels are good. Yeah, that's. I'm liking this more in 1 hour. I find it to be more accurate. Yeah, I like it more in 1 hour. So here's the hit of that. So 367.22. Honestly, there's nothing in between this and the next level here, which is a huge, huge supply zone. So we'll definitely watch this tomorrow. So remember SPY, I would watch that. Qs, we covered. I know there's a lot of fanboys here of Tesla. And you guys see how it's consolidating here. 1, 2, 3, 4, 5, 6, 7, 8 days in a row. I mean, do I need to tell you the level, or you guys got it? I mean, here. And if I was to do the fibs, watch this. No. Perfect, perfect, perfect fib, 50. Then you can do the upside, which I call golden swing. Then here's your 60-on-8, 60-on-8, multiple taps, tap, tap. Then if it comes back to 912, it's a good buy opportunity. A true breakout, if you're going to go long, would be 947, right? So remember this level. You guys got it? All right, well, let's check. I want to show you guys something cool. What is that level? See this?
This is a daily cloud.
Yeah, this is your daily middle that's lining up with our entry, but a lot of people are going to buy it on the high of this 947.77 and our clouds at 948.22. So in order to trust the clouds, just watch the price action tomorrow when people start getting in at 947.77. See what happens to them. What you want to do tomorrow, if this happens to run, is going to do this. This is, what's the type of play that we call this?
It's a bullish money shot.
Bullish money shot, yep. We would wait for this to go long, come back, and then we go buy long. You don't buy the first break. It will come back for the retest if it does break it. Most likely rejects it if the market continue down. So that'll be the Tesla. We covered Microsoft. This Affirm. Man, Affirm was so good today, guys. I think I gave you a level. Yeah, this was the level I gave you guys, 69. I said 70 breaks. It's gonna go crazy. This was a nice play today. I don't know if anyone caught it from you guys. This is a nice rounding bottom. Here you had the double bottom, so if you wanted to play it initially, you see here 1, 2, neckline. Second bottom is right here, neckline's right here. Came back for a retest on the neckline break, 61.76. I mean, you could have printed on the like 75 calls today on these. They probably went 300%.
Perfectly lines up.
Yep. I mean, this was just too easy. But this level here is fairly important. Man, I just keep fucking putting arrows now.
Put more arrows, Shorty.
No, I don't want more.
Put more.
But yeah, so let's watch tomorrow. I would watch a couple of levels, and we're gonna be explaining them right here. So obviously, a good buy zone for this guy is right here, if we can get it. If you look at the volume profile, for instance, we go in 5 minutes. Volume profile is going to tell you that you can buy this. So I guarantee you, with my life, if you're to go on the, forgot the name of the service here, to review the trades back, like to see it through time, it's called replay and trading. I don't know what's called here. On demand. If you're to go here, you would see that this POC at one point was here. and then it basically shifted, and you guys see that it has a little bit of kind of like two mini POCs. You have one that's right here, and then you see the real POC, which is marked with the yellow, is there. And then you see your value areas. Majority of your volume was traded on the bottom side of this volume profile. So if we were able to break below 74, that'd be a great short all the way down to about 71, or about this level, 71.5, 71.1. It'd be a good level to short it, and then it'd be a really, really good level here to go long. And what I like to do when I look at the individual volume profiles, you guys see how it's stacked almost like right here. I mark that area like this, and it becomes a demand zone for me, intraday demand zone. And if you're, man, might need your help, Drew, here.
Bless you, sir. Sure.
Oh, man, I just keep
CPR.
coughing. I think I'm dying.
I know CPR, and I have breathing treatments.
Good. And here, just intraday levels. If you guys never traded volume profile alone, I'll hold a session next week on how to literally just take everything off and trade the volume profile by itself. And here you have a gap. You see that you fly through the gap. Usually, when you go through the break-even zone, which is this right here, you have, you're going to go up, go down. You usually come back to the POC here, and you'll continue higher. Your buy is actually here, and not here. Rookies buy here, experts buy here. The reason why is the psychology of a person that bought it here and they rejected it here is much different than the person that saw it here and uses 3-to-1 reward to go higher up to here. If I know that this is my entry right here, right, my stop loss would probably be somewhere up to here. Would you guys agree? Like, you would let that volume come back down to the next volume shelf, which is about 69.17. Let's say your entry was 69.96, so you're risking what? I don't know, 80 cents or 79 cents. Well, 3-to-1 trade on 70 cents is $2.10. So if you take $2.10 from here, which would put you about $71, you're getting to the next previous high. You're getting almost a 4-to-1 trade. So it's much easier to buy a retest than the unknown here. Now you know where you can take your money off. Does that make sense? Or did I confuse you guys?
Makes sense to
Yeah,
me.
that made
Yeah, it makes sense. So just wait for the retest.
Yeah, I mean, and usually people are like, man, what if it doesn't happen? Then you don't fucking take a trade. Like, it doesn't happen, you don't take a trade.
Yeah, I
You don't have a
noticed
plan.
getting faked out a lot on breakouts on consolidation boxes.
Oh yeah, and that's their goal is, right? Their goal is to, I mean, look at this, right? So just let me kind of hide this for a second. Look at this area right here that they're consolidating in. You see this area right here that they're consolidating heavy in here. I'll just remove this box and this box here. They're consolidating here, and then they're like, okay, well, I think we're gonna go higher, right? And then they dump it. I mean, this candle will scare everyone, right? You look at the full size 5-minute candle. That's it's a nice, decent candle compared to the previous candle, and there you're like, oh shit, it's gonna go down. And then they're like, never mind, we're gonna go up. Then, I mean, doesn't this look? If you're looking at patterns only, what does this look like here?
ascending triangle.
Okay, well, this looks like an ascending triangle.
A flat? Oh, damn.
Head and shoulders.
Yeah, doesn't it look like a head and shoulder now that I pointed out to you guys? Well, it's like, oh crap, it looks like a head and shoulders. Now people are like, yeah, man, we're going down. Well, they're like, okay, well, thank you for thinking we're going down. We also have an inverse head and shoulder here on intraday level. But how can you have an intraday level head and shoulders when you're running? So that's why you have to take these levels and these drawings with a grain of salt, because you need confluence of the market trend. You need confluence of the VPOCs. You need to understand where the spacings are. And then, you have the OEI script to know what is the market maker thinking and what is their max pain. What is it that they're in, so they have to react to it. If you looked at SPY today, last 5-10 minutes, I wasn't able to trade it. I mean, that was fucking insane. Okay, so here's SPY right here. I'm not going to delete this just because I need to use it. Okay, this is your SPY right here. I mean, a really tight open, as we talked about all day, right? They went up to here, and then they broke this initial balance high. I think it was right at 2 o'clock. Yeah, I think it was at 2 o'clock, 2 to 2:05. They broke that range, and you guys see them dumping all the way literally to this trend line here. And a lot of buyers, I don't know if you guys know this, a lot of buyers in different platforms like Ninja or MT4, they have the ability to buy on the touch of trend lines. We don't have the ability to do that here. Like where they will click here and say buy on the touch of the trend line, and they literally pick up points on this touch and get out here.
Wow,
So
that's crazy.
why, yeah, that's why you'll see a lot of these wicks. You can notice every time you touch this trend line, there's a little wick off of it, right? Push, wick, push, wick. So that's why the wicks usually occur, because you have a lot of retailers waiting on these trend lines with their buy orders, and they pump it up, and then it can fall through or whatnot. But here, I mean, I charted the contracts on SPY earlier at 458, 457, I believe I charted.
Damn, if you just take 10% off those wicks, you're doing good.
oh, they do it. That's why I say compounding is amazing, right? So here, this happened at, I would say, let me just go to my standard time frame. Let's say they got in here at, what is this, 318? Watch this. All right. $3.18. Let's say you got the fill right here at 44 cents. I'm giving you the worst case scenario. 44 cents. These contracts went all the way up to $1.05. And remember, you don't have to hold it all the way up to here. You can even just fib it out and figure out where this is going to go to. There you go. You can take your first money right here at 63, your second at 74. And I mean, that's a good percentage, almost 100%. Keep a runner and get it out, right? But it's just knowing how to and be calm at the trades and not FOMO. A lot of you guys, I know the feeling you're in. I've been in it. I know how it feels. You guys are eager to get in a trade to be correct. If you're eager to be correct, you're not going to be correct. But you have to accept when you're wrong in a trade that you know where to get out and you just close the trade. You don't say, well, oh man, it broke this, but I think it's going to bounce right here. If it breaks that, I think it'll bounce here. And it's like, man, yeah, you see that wick right here? I think we're going to get a huge buying opportunity. Once we break this, I think we're going to go to the moon right afterwards, and I'm going to be profitable. You guys do know once you're down more than 30%, it's almost like it's hard to get back. It's impossible to gain the money back. If you're down 50%, what do you have to gain to be even?
100%.
100%. Does everybody understand that?
A+ student does.
There it goes. Does everybody else that's not A+ student like my friend Drew?
I won't
Yes,
lie.
sir.
No, I'm very confused about everything.
You're being sarcastic.
No, I'm not.
Which piece are you confused?
I don't know. It's just it doesn't make sense to me.
The 50%?
Yeah.
Okay. Let me show you. Okay. You have a contract that you paid $225, right?
Okay.
You're at 50% loss. So your contract's at 112, okay? If I was to gain this back, if I just multiply by 1.5, I just gained 50% back. I'm only gaining back the difference between this and that, right? I'm only gaining $56 back. because 50% that you lost here is not the same 50% as it is from here. So the 50% of 112 is much smaller than 225.
Is that because of
If I-
data?
I'm sorry?
Is that
No,
'cause
no,
of
it's
data?
just
That's
because of the math.
Basic math. Very, very basic math.
If I take this now and I multiply it by 2, which would be 100%, now you're back at break even, but you need this contract that's 50% down. You need it to be 100% up now. Am I confusing you
Oh,
guys?
okay. No, I understand now. I see where I got lost. I suck at math. I'm sorry.
No, that's okay. I'm pretty good at math, so for me this is yeah, that's simple. So you have the 220. So make sure. So if you think about this, right? If you so if you look at this, for instance, for a second here, if you take this loss and you multiply it by, this is the difference, right? You would have this. This minus this. This would be your remaining contract value. Agree?
Yes.
Okay. As you go down, you see how the contract value, but if you want to get that money back, here, if you took this and multiplied it by this value here, you're very close to break even. You see this? So your difference here, you're still down a little bit. So you're down $2.25 here, even with a 10% gain off of the top of this. And then you can basically figure out, like at one point, I believe it's a 30%, it's impossible to get it back. So here, so here you go. Look, at 30% loss, you're losing money here. You know, however you like it or not. Even if you gain the 30% back, you're still in the hole for $51. Does that make sense? So hopefully, you know, some of you guys that don't like to, you know, take your losses, and you're hoping that the contract will return from 0.07 to, you know, 267 because you bought it at 135. That's a rare occasion that's going to happen.
And that math doesn't even include theta decay.
No, this is just plain math with no data decay. We come up with something that has it, but
The
you guys see something
bottom line
here?
is your cheeks are going to get clapped. So
Yeah, you're
cut
going
your
to be
losses.
destroyed. Yeah, learn how to cut losses. Until you learn how to cut losses, you're not going to become profitable.
I mean,
You know, if you
That's
take
fair.
yeah, if you take 10 trades and your risk to reward is 3 to 1, yeah, I think if my math's right, if you take 7 trades, you only need 2 trades to be profitable.
Yep. So that's
I would definitely
head and
watch
shoulders
this
there.
tomorrow. Yeah, I would definitely watch this. This can crush the market here. Yeah, so I'll definitely watch this 88.41. If that happens, I mean, you know, your XOMs, all of these. Remember when I said that 83 would be a good exit, or 82.53 will be a good exit on those XOM contracts? If you guys recall, you can probably find it in the chat. Why we did that? Does anyone know why we did that? Why we got out? Where we got out?
Was it VPOC?
my goal was this because our risk was very low because we got it here. We got it on the bottom. We sold it kind of, I think it was 82.4 that I sold or something like that. So I had a really, really, really tight risk on this. It was literally, if I go negative, I sell it. And it worked out. But you have to have a plan. You have to have discipline to cut the losers. Like, was anyone in the BA trade with me today?
Oh, me.
Yep. I told you immediately when this happened, I said I'm getting out of the BA right here, and look at the dump that we had after that.
Yeah, I took a 10% loss.
Yeah, I mean, is it better to take 10% loss than take 70% loss and be like, hey man, it's gonna bounce?
Exactly.
Yep. I think I sold it at 115. We got in at 120. I think that was my sell. I think it was, yeah, it was 120. I can actually find. Yeah, my entry was here. It was at 120. It was right here where I got it. And we wanted to get that break, and I got out at 115 right here. And I was like, no, man, this doesn't look good. Poof. Contract went all the way to 0.6. I would have lost 60%, 50% of that money if I didn't cut right here. But instead, I think I lost $50.
Shorty, what do you think of AMC?
We got into AMC calls. So on AMC, I mean,
Oh, yeah, I'm in those with you.
Yep, so that's what I think. If you look at AMC right here, I mean, obviously we're in a nice break here. Obviously 2031 is fairly important. So we had this break. We had this nice double bottom here, level right here. So we're probably going to come back and retest this, to be honest. Let's see, what is this? This is high 1815. Is it? No, high is 1871, so very close. Probably going to come back, retest, maybe dip a little bit below it. We could almost draw a little demand zone off of this right here. See if it comes back and holds this like $18 level. But I would expect that my crazy theory is that they drop these markets because a lot of hedge funds are losing money, losing their ass off on AMC and a few other shorts that they had that they were over leveraged on. So the markets are helping them because they probably threatened to bring down the economy, like Lehman Brothers and who else. So they said, oh shit, okay, well, what we can do is we can do this. Because there's a couple of hedge funds, if you look and Google the news, there's a couple of them that reported losses of like $15 to $20 billion last year because of AMC.
Shit it out.
So I just think there's a lot of covering still that they need to do on this.
BBIG as well. It's going crazy today.
Oh yeah, today I think it was 22% or 19, 27.
Don't they have earnings tomorrow?
I don't know if Slabby's on the call, but I bought.
Yeah, I'm right here.
Well, all right. Remember when I bought 1,200 PBIG calls?
Yeah, bro. I sold them for like minus 50 or like minus 60%. I think they went to like minus 90%, and then boom, they were like 12,000 crazies or like 8,000.
So I alerted in my previous Discord some BBIG kind of lottery calls. It was $10 calls for 2022, or I don't know, 1 year. Well, they got it, but you know, people are, and I told them that it's more like a squeeze play. You kind of buy it and forget it. Well, some of them took losses, which is okay. I actually like tripled down on them when they were like 8 cents, meaning $8, just like $8 even. Well, I bought 1,200 of them, and then these $8 contracts went to be 1,200 each. So
This was shortly after AMC.
Say what?
This was shortly after you just did that with AMC too.
Yeah, that was right after I called AMC at $1.88. Yeah, that was good. But we won't see those AMC type of squeezes just yet. Market needs to dip a little bit more.
Can you review NVIDIA?
Yeah, let's do NVIDIA. NVDA. Okay, maybe not.
If you have a chance, Shorty, if you could just go over the full send indicator really quick. A lot of people are asking about it. If you don't mind.
Oh, no. Yeah, we'll cover it real quick. So, I mean, it has a nice trend line here that it needs to break. I would definitely watch this right here to see how this area here kind of corresponds to the previous bounce. So for me, about 271.68 would be the entry if I was to play it. So some people will play this to 270. I just don't think it's enough meat for me to play it. And it's a lot more riskier for me here than it is to play once it reclaims and retests and goes forward. Once it gets above it and it can hold this level, like 270, I would trust it with the swing as well.
So buy on the retest of 271.
Yeah, that's what I would do. I mean, this is a huge, so if I was to look at this, you see where the 50% is right on. You see where it bounced off here. Fairly important 50% fib here. So above 288 is going to go to all-time highs. Okay, what was the question? Full send?
Yeah, a lot of people are asking about it. If you wouldn't mind just covering it really quick.
Okay, well, I'll do it quickly. Let me find an indicator, like one that I haven't charted, so it's not full of crap. Man, I'm tired. Okay, so here's UPSD. Excuse me. So when the indicator shows up below the candle, that means it's bullish, right? When the indicator shows up, let's say like here, this fast as fuck boy is just cracking. When it shows up here on the top, that means you want to short it. And then in the indicators itself, I showed you guys that you can change your under globals. You can change the color of the cloud that comes up, the demand that you guys saw earlier. It was like greenish. You can change that to whatever you want so you can remember them, right? And see which one it is. Just focus on the greenish one, the highest probability ones, and see how the price reacts to these yellow ones when you kind of backtest the study, right? So if I go on 4 hours, here's a green one, fast as fuck boy, showed up at 286, went all the way to 400, and we haven't had a fast as fuck boy show up again right here.
I can't believe you're calling it that.
Well, it's just there, so I'm just reading. And now we haven't seen it, right? So if it's above the candle, that means shorting. If it's below it, I do suggest that you guys use it maybe on 10 minutes. If you're kind of comfortable, if you're like super like, man, I want to use it in 5 minutes, sure, you can use it in 5 minutes. You can place your stop losses pretty much, the way I like to do it if you're going to, trade this is literally don't let the trade go negative on you. I know a lot of you guys have a cash account. If you're not comfortable with that, if you get in here when the full send shows up, give it 10% or so. Let it kind of set up a 3-to-1 trade, right? So here I'm risking 64 cents. So I mean 3-to-1, 3 times 64, 380. So about 192. So I'm looking for a $1.92 move from here. I don't know, I'm just doing quick math. And then you basically say, okay, well, I get in here, I'm out here, and you get out. That's how I use the full send. I'm not going to call it. That's weird. Any questions? And a lot of you guys messaged me on the Discord for it. So I will go through it. I can't promise you guys I will get to it tonight, to be honest. I'm just super exhausted.
Take your time.
Yep. So I will try to get you guys set up tomorrow. Worst case, if we have a slow day. What time is the CPI? Is it 8:30 or is it afternoon?
I thought it was before open.
Oh God.
Yeah, it's at 8:30 in the morning.
Ooh man, it's gonna be a nasty day tomorrow. I expect a lot of volatility tomorrow. Let the ad be your indicator tomorrow. Let the ad lead you if you should go long or not over those levels that we have. But yeah, I'll work on getting everybody set up here. I'll just put it in a package and copy and paste to you guys. Okay. Amazon, yeah, I can take a look at over Amazon. Somebody else. Okay, so Amazon broke out of the trend, the daily. I mean, if you're gonna play it, you have this right here, 3272, and I think this will line up on the cloud if I remember my levels automatically. Where is it? Yeah, it was a daily top. So it was on a daily top cloud. I mean, I personally don't like to trade inside the cloud. I actually avoid that because it's a lot of choppiness, as you guys can see it here. So for me, so far, if I was looking at it, 3,300, it's inside the 4 hours. You guys had a good opportunity here to short it. Does anyone see it? Yep, there's a couple of good opportunities here with the bearish money shots, right? So you had one right here that was a bearish money shot. It never broke the cloud here. It rejected the line. Once it gets out of the cloud, you shorted there. And now, watch the 3184 level. Google filled the gap of the earnings. Amazon never did. So I'd watch that really close. And then let's check the weekly. So it didn't even push to the weekly mid here. And I gave you guys to everyone here. What do you guys see in 1 hour here on Amazon?
Bearish divergence.
I mean, honestly, there's no volume. I mean, there's no momentum on this push right here. This push here is a bear trap, a bull trap, I'm sorry. So I'll be shorting Amazon very soon. Hopefully that helps. And that's it. Any other questions from anyone?
Google if you can.
Yep. So Google, I mean, it's just gappy everywhere. So Google has to reclaim this above this, I guess, make a higher high from the previous one at 2858. Once it does, it has a little bit of room to go, probably up to this level here, 2967. And this is weekly mid here that's coming up at 2840. So 2858, that cloud here that we have is pretty accurate. Weekly pivot acted as resistance today. You see how close these are? Like 25 points. Sure, you can scalp that, but you're going to pay premium on Google. So look at this real quick. So the 4 hour cloud, perfect rejection on 4 hour mid. If you're able to go below 2830-ish, it's not a bad short. Yep, I would definitely, and you got to watch for this zone here that we created. So if you're gonna get in 2830, make sure you get out at 2808 because you're gonna get a fast as fuck boy signal.
It closed at 2831 and it dropped to 2829 after hours.
Yep, I mean the spread is $4 right now after hours, so I don't trust much after hours on the big names because they don't trade big names after hours that much. At least not to fluctuate the price to signify which they're going. They're gonna execute the orders tomorrow at 9:35.
So 2858 over.
Yep, over 2858, you have room to 2901 right here. And then you see the weekly pivot right here, which we would, you would not be playing it in this range anyways. But you about 28.58, you have 28.75, and I would almost bet my life that you're going to reject here somewhere 28.75, 28.80. You'll reject there, and you're, if you look at your MACDs for 4 hours, 4 hours about to turn up, so that's pretty good. The daily should be curling too. It's already curled, but the momentum is dying. It has a bearish divergence on the top. So let's see. I mean, it looks like it looks like an inside day, right? So most people will be looking this level right here, 28.50, which you could go off of. I would just be very, very careful of the 28.58 because they don't see it. Yeah, they don't see that level. Yeah, I'll definitely watch that. 28.58, take a long. And then be able to clear over the 28.75, the daily top. But it's been ping-ponged here between the daily and the weekly pivot. So reclaimed went up. Now I don't know what it wants to do. I mean, it filled the whole gap it had, basically. It had $300 gap, and it filled it all the way down. So let's see what it does. I mean, I'll be bullish over this 28.58 level.
Yeah, I would think it would get back to 3,000, being that it also has split in a few months.
When is the split? Did they give a date? Does anyone know?
I think it's in July.
Yes, in
Yeah.
July, a few months.
So it's a big. So you guys see this order here? I'll highlight it.
Yeah.
Come on. Make sure you guys see this. $9 million order right here.
Why are you flexing, Shorty?
Oh, no, that's why, not me. But it's not a spread, which is weird. You see how many spreads there are? And if these are, 28.80. So these are 211. This is for this week. We're gonna close about 2,900 on Google. Somebody's selling these puts. And look at the premium they're collecting.
I'm in a 2,900 call.
They're in a 2,900 call.
Yep.
Yeah, we're gonna close above 2,900.
But I bought it with 2,850 profits.
Okay, well, I might join you on that tomorrow. We'll see. I'll watch that 28.58 break and then I'll hop in. Yeah, Google will be good once splits. What that make it? What, $150 or something like that? If it's a $3 grand, that'd be fun.
Oh,
All right,
yeah.
guys. Any other questions? I'll work on. I really can't get to it tonight, guys. I'm sorry. On giving you guys the access to all this stuff, and I have to kind of reconcile it between the people that messaged me and who wanted it.
Yep. Take your time, man.
All right, guys. Well, that's it for me. I'm about to hop off so I can be fresh in the morning, and we'll kill it tomorrow again.
All right, thanks, Shorty.
All right, guys. Have a good night.
Thank you, Shorty.